It's 10 a.m. here in Lagos, Nigeria. Good morning and welcome to Business Morning on Channels Television. I'm Ini John Mekwa. This is where you get the current conversation when it comes to what's going on in the business space. Let's begin with oil prices. It firmed today over fears of a potential supply shock as the United States banned Russian oil imports amid signs that some buyers are already shunning them. Brent crude futures were up $2.91 at $130.89 a barrel, while U.S. West Texas Intermediate crude futures also went up $2.34 at $126.04 a barrel, and that's after it surged over 3% yesterday. U.S. President Joe Biden has imposed an immediate ban on Russian oil and other energy imports, and Britain said it would phase out Russian oil imports through the end of 2022 in response to Russia's invasion of Ukraine. Shell on Tuesday said it would stop buying Russian crude and phase out its involvement in all Russian hydrocarbons, becoming one of the first major Western oil companies to abandon Russia entirely. Meanwhile, Goldman Sachs has estimated that more than half of Russian oil exported from ports remain unsold, while JP Morgan estimated about 70% of Russian seaborne oil was struggling to find buyers. Oil prices have surged more than 30% since Russia, which is the world's second largest crude exporter, launched what it called a special operation in Ukraine. Fears of further disruptions to oil supply amid escalating sanctions on Moscow has boosted buying. Back here in Nigeria, the Nigerian Ports Authority says it is ready to test run the Lekki port by September this year. This was made known by the Managing Director, Mohammed Bello Koko, when he paid a courtesy visit to the Governor of Lagos State, Babajide Sanwo-Olu. On his part, the Governor mentioned that the road leading to Lekki port is near completion and will ease burden on business activities at a Papa port when it becomes functional.
Lekki, Your Excellency, too, has been there. He has made public comments about the kick-up of Lekki Seaport. We believe Lekki should start test runs sometime in September. We're here to plead with His Excellency to increasingly give more attention to the roads leading to that port location, so that we avoid a situation where we have the same traffic gridlock that we have in Tinkan and Apapa.
I'm happy that you are in discussion with the proponents and the developers of Lekki Port. You know, ourselves are both equity owners in the place, you know, and I think they've identified who will be the port operator, but you still have a regulatory function to oversee and ensure that it conforms, you know, with the practice that the rolls out, the rolls up that you have, you know. Yes, we're not unaware of also the road, you know, and if you ask your people, we on our own have taken up the very difficult one, which is an 18-kilometer from the Lekki Junction to Ekpe, and we've turned that road, you know, into 6-lane highway, rigid pavement. It's like what you see on Apapa Oshodi Express. It's rigid concrete pavement, you know, that we've also built, and we're completing it by the end of next month or something.
Welcome back. Well, the West African Science Service Center on Climate Change and Adapted Land Use, that's WASCO. It's a large-scale research-focused climate service center designed to help tackle the challenge of climate change and enhance the resilience of human and environmental systems to climate change and increase variability. It does so by strengthening the research infrastructure and capacity in West Africa related to climate change, and by pulling the expertise of 11 West African countries and Germany. This project is funded by the German Federal Ministry of Education and Research. So we refer to it as WASCO from now. It's implemented in a collaborative effort by West African and German partners. We have joining us from our Abuja studios two representatives of that project. Now we have Dr. Solomon Ango. He's the project coordinator of Green Hydrogen Atlas Africa, joining us there. He's from Jülich Research Center in Germany. And then we have Professor Apollonia Ohimame, Director of WASCAL Climate Change and Human Habitats at the Federal University of Technology in Mida, that's Niger State. Good to have you, Dr. Agbo and Professor Ohimame.
Thank you very much.
Thank you very much.
Good. So let's start with Dr. Agbo. Help us to understand, you are the coordinator of the project. Help us to understand what this green hydrogen energy project is all about.
Thank you very much once again for having me. So the project, it's an initiative that's aimed at looking at the potential of generating green hydrogen from across Africa. So this is a partnership between the German Federal Ministry of Education and Research and WASCAL together with the countries, African countries, especially within the sub-Saharan Africa. And the aim of the project is to look at the potential of generating green hydrogen from these countries in one way as part of the energy sources that will contribute, or that's going to play a role in the energy transition of the future. And in another part, because the green hydrogen is also going to play a role in terms of addressing the issue of climate change. So the project is looking at potentials. So we do like a resource mapping, trying to quantify, trying to assess technically if we have the potentials in terms of resources, but also in terms of other enabling conditions to make the production, the utilization of green hydrogen possible in Africa.
And Professor Ohimame, this project is fully sponsored by the German Federal Ministry of Education and Research. It would be interesting to know their interests in this, and tell us more about the organizers of the project.
For the German Ministry of Education and Research, the issue of climate change is on the front burner, and they were one country that was proactive enough to try to redress the issue of adaptation. And then WASCAL came on board because we are aware of the fact that West Africa is one of the areas that is most affected by climate change. And having a country that is known to be one of those that I would say probably are accused of getting us where we are today, to be interested in at least attempting to resolve the problem caused generally. They took interest in capacity building, and that resulted to WASCAL. And then WASCAL is not only developing capacities, it is also involved in research. And that was how we got involved with this green hydrogen project potential as one of the areas that WASCAL can key into for West Africa.
So, Dr. Agbo, what are the main resources needed for this green hydrogen production? And based on this, can Nigeria be a green hydrogen producer?
Yes, so to produce green hydrogen, first of all, basically speaking, so green hydrogen is produced when you split water. So in chemistry, you call this electrolysis. So when you split water into hydrogen and oxygen, so basically these are the components of water. So when you have a source of energy, a source of direct current that splits water, then you get hydrogen and oxygen. And so this basically means that you need the energy source. In this case, it is green hydrogen, so which means you would need the source of renewable energy, so which this could be solar, this could be wind. Then you also need water, because it is water that you are going to split, basically, and then you get hydrogen, and then you get oxygen. So the hydrogen you collect, and then you can use for various purposes. So if you look at these basic components, so you need renewable energy. Nigeria has in abundance renewable energy. So whether it's photovoltaic energy, so this is energy you can extract from solar radiation in form of electrical energy, or whether it's also energy from the wind. So based on the study that we have so far done in the H2 Atlas Africa project, it's not in doubt. So we have the abundance of renewable energy, wind and PV, and these can be harnessed. So we have the land area that will make it possible also for these resources to be harnessed. We have also water resources. So whether it's groundwater or whether you would need to also desalinate water to be able to produce green hydrogen. So these resources we have in Nigeria. So based on this, it's actually not in doubt. From the work we have also done, it's clear that Nigeria could be one of the big hubs for green hydrogen production, not just in Africa, but really globally. And Nigeria can also play a very key role within the international energy market when it has to do with green hydrogen production and also possible export. So yes, I can say emphatically from the point of view of technical analysis that we have done, Nigeria has all that is required to be able to produce green hydrogen, to drive her own economy, but also to be able to be relevant in the international energy market.
Yeah, but having the potential, Dr. Agbo, is one thing, but exploring that potential is another thing. And you are the one coordinating this project. How far have we gone with exploring it? Because there are other countries too on the continent who have these potentials, and some of them seem to have gone ahead to start exploring, the potentials. But how far have we gone, and what will make Nigeria stand out, when you look at potential in other countries also?
Yeah, okay, thank you very much. This is really an interesting question. I think that that is also part of why we are grateful that we have this opportunity to have this discussion. So one of the things is that that is required is that we to get started, we need to get ready the enabling framework conditions that will make the generation, that will make the utilization, that will make also the export possibility options possible in Nigeria. So like you see in many parts of the world, also here in Africa, we would need to have a clear policy that supports the production and utilization of green hydrogen. We need to also set in motion what is also done in many other countries, the national hydrogen strategy that sets clearly a roadmap for the use of hydrogen within the energy transition in the future. We also need the necessary regulatory frameworks, we need the necessary legal frameworks. So these are all the things that we really need to set in place to get really started. And I think that, hopefully with what we have done on ground and with a number of the MDAs within Nigeria that are coming together, we will be able to really very quickly set up these framework conditions to make the production possible.
So, Professor Imame, other than the framework that we need, according to Dr. Agbo, what else do you think can be put in place in Nigeria to maximize the benefits of green hydrogen energy?
First, we have to develop our capacity before anything else, because having a framework is one thing. Having the ability to ensure things work is a bigger aspect. So there has to be capacity building, and that I can say is already in place because there is a master's program in hydrogen in 4 countries in West Africa, which is part of this green hydrogen project. It is meant to build the capacity of young Africans to be able to tackle the issue when, just like the question you asked Dr. Agbo, so that they will be able to, key into this, and we are sure we have the local expertise. Nigeria is not yet one. location where we have this master's program to build capacity, but very soon, I think in the nearest future, we will have one of those master's programs under the framework of WASCAL. So WASCAL is a program that has to do with climate change, with a focus on different thematic areas, but it is also interested in renewable energy. And the first on the list is this green hydrogen project we're talking about. So apart from the framework, there has to be capacity building, and very importantly, investors have to key in, because this is not something, it's a big endeavor to get into. It is not something that you leave to government alone. Government has to create the enabling environment, but investors have to also play their role. And one of such investors, if I may say, should be the AFEX gas and oil and gas industry in Nigeria, which is the NNPC, and its and other similar oil and gas, how do you call it, parties who are interested in oil and gas activities in the country. Because now there's a war going on, and I'm sure everywhere there's this buzz about US and other countries trying to, break off from exporting or importing oil from oil and gas from Russia. Now there has to be an alternative. This project is already on ground, and that is where I think they have been proactive. The Germans have been proactive in developing this project. It is right now on ground. So while we are deviating from oil and gas, there's already something on ground that we can tap into. And for a country like Nigeria, we have an atlas that shows us the potential. So we will be, how do I say, we will be making a big mistake not looking into the possibility of tapping into this big time.
All right. Interesting, especially because you brought in the issue of the war going on in Ukraine and the efforts of a lot of countries trying to, reduce the reliance on oil and gas, especially the one that comes from Russia, and some people have said perhaps this is what's going to force people to embrace the alternative energy. But back here in Nigeria, how do you see building interest, both for investors, and then you talked about the master's program? How do you think that people can be made to be interested and look the way of this hydrogen energy, green hydrogen energy that you're talking about? How do you intend to catch people's attention and sustain it in the area?
Okay, we've started with this program. This is a way of creating awareness that the program is in existence. We're also planning with the right stakeholders to organize a stakeholders meeting that will also educate key stakeholders about hydrogen, the importance of green hydrogen energy, what it can do, and the fact that we already have an atlas on ground. So rather than reinvent the wheel, starting all over again, we can go from here, not just the stakeholders, but we can also, like Dr. Agbo said, there should be an enabling environment which will be facilitated by policy. So government has its role to play. There has to be some strategy. What is it Nigeria really wants to do with this green hydrogen energy? How it tends, where it intends to emphasize on, and what it tends to do. So I think if we look into all of this, first, stakeholders awareness creation. Secondly, policy to enable, to create an enabling environment. And thirdly, strategies to show how we intend to use, or how we intend to be part of this global initiative. It's occurring in most countries. Maybe Dr. Agbo will tell us later the countries that have really taken this seriously and are working independently or with the Germans to achieve this. But we have to take care of, like you said, we have to take care of our own local needs. Stakeholders have to be aware. We can organize workshops, come to programs like this, create more awareness, and then educate the younger generation on how to use or how to not only use, but how they can contribute to ensuring that we have the local expertise that can drive this, the new endeavor.
All right. Thank you so much, Prof. Unfortunately, we do not have the time to take Dr. Agbo on that. But I'll thank you so much, Professor Apollonia Ogimame, Director of WASCO Climate Change and Human Habitat at the Federal University of Technology in Minna, Niger State, as well as Dr. Solomon Agbo. He is the project coordinator of the Green Hydrogen Atlas Africa. Thank you so much for this enlightenment, and we do hope that you follow up the conversation to gather more clouds on it. Well, you're welcome back. For the weekend, the 7th of March 2022, deals on the AFEX commodity market dropped by about 30%. That's why we have Michael Martins now, the portfolio manager, joining us for the details from our Abuja studio. Hello, Michael. Good morning.
Hi, Ine. Good morning. It is always a pleasure to be here.
Good to have you, Michael. So what's going on? Well, give us a summary of what happened with the drop, 30% drop in deals.
Thank you very much, Ini. So if you look at the table in front of you, it gives a summary of what happened on the exchange in the week under consideration. The total value of transactions traded on the exchange, which is equivalent to the total turnover, went up by a factor of 3.8 from 0.95 billion to close the week at 3.66 billion. The total volume of contracts traded on the exchange also went up by a factor of 5.9 from 2.34 million contracts to close the trading week at 13.82 million contracts. And the total number of deals, however, fell by 30.2% from 487 deals to close this trading week at 340 deals. The ACI, which is the AFEX Commodities Index, fell slightly by 2.62% from 481.02 points to close the week at 468.39 points. The AFEX Export Index, however, went up slightly by 1.60% from 195.52 points to close the week at 198.65 points. With regards to the volume of contracts traded on the exchange, we generally saw a large increase in the volume of contracts, with the major culprits being maize, which went up from 575,000 contracts to close the trading week at more than 8.9 million contracts. Paddy rice also went up from 801 contracts last week to close the trading week at just over 4 million contracts. Ginger, cocoa, and sesame also traded higher volume this week in comparison to the previous week. Soybean, however, was one of the very few commodities that fell with regards to the volume of contracts, trading lower from 1.26 million contracts last week to close at just over 88,000 contracts this week. With regards to price changes on the exchange in the week under consideration, we saw the biggest changes happen with maize, which went up by 2.68% to close the trading week at 232.54 naira per kilogram. Cocoa also went up by 2.20% to close the trading week at 1,300 naira.13 kobo. Paddy rice also went up by 2.13% to close the trading week at 235 naira.64 kobo per kilogram. Soybean was the last to go up in the week under consideration, going up slightly by 0.04% to close the trading week at 401.92 naira per kilogram. We, however, only saw a decline with one of the commodities on the exchange, and that was sorghum, which fell by 3.41% to close the trading week at 226.95 naira per kilogram. And those are largely some of the price changes and also volume changes that we saw on the exchange in the week under consideration. And as we always mention, if you want to know more about the commodities market and if you want to get started trading commodities, you can always download our app, which is available on iOS and also on Android.
All right, so in the light of recent events, what are the implications of capital flows on the commodities market?
Thank you very much for that question, Ini. I think the first thing we can note about what has happened in recent time is that there's been a lot of uncertainty about the general financial market, but more importantly, in this case, the commodities market. And what tends to happen during periods of uncertainty is that investors are risk on. And what that means is that capital tends to flow away from equities and other risky assets into the fixed income space. What we have seen happen in recent weeks is capital flowing out of the equity space into the fixed income space, and then of course as it concerns the commodities market, the commodities market itself, the alternative space. And what tends to happen during periods of uncertainty, at least in the short term, is what we refer to as backwardation in the commodity space, which means that today's spot prices for commodities would essentially be higher than what you have for the futures prices, which is a bit of an anomaly in any given scenario. What also tends to happen, right, over the long term is what we essentially also refer to as commodity super cycle, which is when commodities have sustained higher prices, sustained higher base prices at every other year for an extended period of time, which is what we are seeing play out in the commodities market in recent years. It is also important to note that commodities super cycles tend to sustain themselves based off of demand. And what this means is that commodity cycles are usually better off if they are demand boosted or a demand side commodity cycle. The first commodity super cycle that we had at the beginning of the millennium was caused by approximately 400 billion people essentially becoming richer out of China, which essentially boosted the demand for commodities. It does seem like the commodity super cycle that we are having at this time period are more or less caused by supply chain and supply constraints, which has partly been due to what we had with COVID-19 and then also the uncertainty that we have had with Russia and Ukraine in recent weeks.
And when we talk about super cycle, what implications does it have on the global economy?
With commodity super cycle, I think one thing is self-evident. There are three broad implications that we will touch on, but I think the first and probably the most pressing one at this moment would probably be inflation, right? Like I mentioned earlier, commodity super cycle are essentially higher commodity prices that sustain themselves, over an extended period of time. What that very often transfers into is that you immediately have higher production costs, right? So for processors and people who use commodities on a day-to-day basis in their production process, you essentially have higher production costs. In no little time, that higher production cost is also transferred, into higher consumer prices, which of course is evidenced by high inflation. And what this does is that it reduces the purchasing power of the average individual, in any given economy. And if this sustains itself for consecutive quarters over the course of an entire year, what tends to happen in that country is you then see an economic recession, right? Which some economies are currently flirting with. For example, the United States, which has had the highest inflation rate, I think between 7 to 7.5%, which is the highest in about, in about 2 decades, right? So what tends to happen is you see higher inflation. You also then see, if that inflation is sustained over an extended period of time, you then also see an economic recession. And what also is more important for us as a company to also note, and maybe also as an economy to also note, is that it essentially now becomes way more difficult, right, to become food secure as a country, because higher commodity prices lead to, like I said, lower purchasing power for the average Joe. And what that means is that for people who don't necessarily see an increase in their income follow in tandem with increase in commodity prices, what tends to happen is that they tend to fall below the poverty line, which then brings to question whether or not how more increasingly difficult it becomes for a country to become food secure with higher commodity prices.
All right, Michael, thank you so much for bringing us up to date on that. I will just shift a bit and talk about some other thing connected to AFEX. Now, the agricultural risk landscape is shifting, with producers increasingly confronting new sources of risk caused by changing climate, anticipated changes in policy, or the economy-wide effects of shocks external to agricultural sectors, such as the global pandemic. I mean, now we have the Ukraine war, and both countries are deeply embedded in world's agricultural and food market. Hence, it's influenced crude oil prices, commodities, and most especially, we've been talking about wheat and, the financial market. So the big question is, how do we confront these shocks with the goal of either reducing the negative impact or significantly reducing the likelihood that those events occur. Well, to attempt to answer this question, we have Hemense Oka, Vice President, Corporate Services at AFEX. Hello, Hemense. Good morning.
Hello, Ini. Good morning. Pleasure to be here.
Good to have you. So one of the identified ways to confront the shocks and risk in the agricultural sector has been through disciplined application of holistic risk management strategy. Now, being a proactive rather than reactive, what proactive measures should we be putting in place at this time?
Yeah, so when we talk about risk, we're looking at any acute shock or hazardous element that's going to take place. And there's no one-size-fits-all solution to this, but it's about developing a holistic framework in which an approach that you can use. So here at AFEX, we like to look back retroactively and see what type of risks have occurred in the past that's distorted the market, and also potentially what could occur now in the future. There's a saying that says, never let a good or never let a bad crisis go to waste. Not to make light of recent events with COVID and then with what's happening in Ukraine, but then how do we learn from these instances so that we're able to better adapt? And what we see here, the challenge and the opportunity is in creating systems that are functional, inclusive, and efficient. So you're going to have many producers, many processors, many millers all working together in coordination. And so if any one of them fails, an alternative will be available and step up in its place. So that's how you're able to create a sustainable, functional, and resilient system.
And the public and private sectors, have roles to play in this creation of a resilient and sustainable system. Private role, could you highlight, some of the roles that these two, different areas have to play?
Definitely. So the issues are quite complicated and multifaceted. So both parties are going to have to work together here. From the government angle, they start off with policy. So what sort of trade policy are going to be in place? What sort of policy towards infrastructure development is going to be in place? And that's key and crucial, is to set up an ecosystem that's going to be functional and efficient. Second is in financing, right? So the government has the ability to play a transformational role when it comes to funding SMEs and other agribusinesses in the sector, enable them with blended or patient capital for them to grow. On the private sector side, the focus should be on training and capacity building. So what sort of programs can the private sector implement that are going to enable a smallholder producer to be more tangible and responsive to shocks that take place, enable them to grow? Another aspect of that is the use of technology that's going to be adaptable to their local environment. So what sort of innovations are in play that can be used? AFEX had an experience when we partnered with a different company that provided drip irrigation for smallholder farmers. And that's a way for them to boost their productivity and be more efficient with the use of water. Now you have to be careful because the protocol was a bit too complex, so you have to then adapt it to the local usage and local standards. But yes, so both government and private sector have a role to play in this together.
And as a leading commodities exchange in Nigeria, what's AFEX doing to help producers combat the agricultural risks and shocks that we're talking about?
So the focus is on improving and boosting smallholder productivity. So if a smallholder farmer can increase their yields, that means more money in their pockets. More money in their pockets means they're able to absorb, adapt, and change with any risk or any shocks that could occur. So first and primary on this is creating the demand. So we provide market access to farmers, enable them to grow products that are actually going to be a market for them and they can sell and earn high yields and rewards from. Next is focusing on the inputs and the quality inputs that we provide. The more inputs that are used, that can also boost their productivity. And finally is in the training and assistance that we provide along the way. So what sort of crop diversification should they use? How can they adapt technology to what they can grow? And all these are going to make them more adaptable and help them to respond to crisis and other shocks better and improve their yields and improve their savings as well.
All right, Emense Oka, Vice President, Corporate Services at AFEX. Thank you so much for sharing your thoughts with us.
Thank you.
We'll take a breather now, just before we head to the markets. You're welcome back. Well, it was another red day yesterday at the equities back here in Nigeria, and I wonder what's driving this. This is earnings season. One would expect.
Good morning.
Good morning.
Negative sentiment still persisted in the equities market.
What's happening to the earnings, the corporate earnings? This is the earnings season. We should feel a bit of that.
I don't know, Ini. It's more like investors have already priced in their, maybe traders have already priced in all the profit they need to make, and they're not really, concerned about the dividend declarations or whatever. It's not just, encouraging, buy activity, especially for stocks. Rather, we're seeing a drop in the share prices of most, big names. Yeah, most stocks in the market there. We saw impressive earnings from those corporate organizations, but investors are still not taking the bite, So we just
perhaps it's the availability of the liquidity. Have we checked at that? Yeah, we should also look at that. If you don't have the money, then, it doesn't matter how attractive an investment looks like. You just decide, I need to take care of I have to prioritize my needs.
That's exactly true. You're not far off there. Now, we saw Nestle dropping about 2.8% yesterday. That really largely triggered the drop in the all-share index. It lost 40 naira index off its share price yesterday, and the all-share index declined by 0.23% to close at 47,154.35 points. Now, a breakdown of the NGX ASI sentiment report shows that there were 20% buy and 80% sell in yesterday's session, and that's not very encouraging, as we're talking earlier with Ini. Now, analysts expect the negative trend to linger in today's session, as investors, we mentioned earlier, the appetite remain weak. The total volume of trades increased, however, it increased by 158.6% to 741.79 million units, while it was valued at 3.5 billion naira, and deals was 4.161 down. Now, performance across the sectors, was negative as well. We saw all key indexes in the red yesterday. The banking index was in the red. 4 out of the figures, except for GTCO, which made a profit yesterday. All other tier 1 banking stocks were in the red. Consumer goods, we saw Nestle, pulling that back there. We also saw Honeywell Flour Mill, and we also saw Flour Mills pulling that counter down. Industrial goods sector, Lafarge was the bigger culprit there. Insurance sector, we saw Wapik doing the thing there. Oil and gas, O&O was down. Aldova was down, and we're just wondering what's going to happen to the big names, going forward. Now, the NASD index, however, made a rebound yesterday. It was up 0.76% at 733.44 points, and the market cap stood at 621.06 billion naira. Now we're seeing this change in the NASD, and but however, the volume transacted yesterday was a bit low at 888,452 units of stocks sold yesterday, while 9.31 million naira was the value of stocks traded, and all executed in just 5 deals there. We'll move quickly to the fixed income market, where the bond space closed bearish. We saw sell-offs on the short to mid-tenor paper, but now the average yield rose marginally by 2 basis points as the 2024 paper closed at 8.5% from 8% on the bid. Now, there was much interest on the 2026 paper there, and also for the 2042 paper. Now, Treasury bills was on a positive note. We still saw some buy interest there for the bills, but the average yield closed flat at 3.4%. Similarly, for the OMO segment, it was unchanged at 3.3%. It's still not very encouraging, but investors are still investing. Now, despite the inflow of OMO maturities of about 110 billion naira yesterday into the market, we saw that boosted the system liquidity. Maybe that was responsible for the uptick, the marginal uptick we saw in the bond space, but we don't know what's going on. Maybe when analysts come up, we'll shed more light on that, and possibly maybe in anticipation of the auction that's going to take place, that the Treasury bills auction that's going to take place today. Maybe that's why we're seeing these changes in the market, especially for the bond space. And the CBN special bills, we saw 6 billion naira on the May 2022 paper, and we're just hoping that there'll be more maybe transactions that will happen today. But the market is really having a lull. There's no big boost in the market. There's no trigger. There's no direction right now as to what's going. Maybe probably it's the Russian invasion that's coming in to, have its toll on Nigeria. But Nigeria has been spared a bit. But we are hoping that we make a rebound and come back to the green. But analysts have said, and the projections have not been wrong so far, and we're hoping that the market dictates, maybe flips the coin, like I said yesterday, to see that. So anyway, we're just hoping for a miraculous change. Like the market is quite volatile.
Yeah, don't forget that MPC is coming in a couple of weeks.
Yes.
Maybe that will bring something different. Maybe. Watch this space.
Watch this space.
All right, Will, thank you so much for that update and analysis. Now we'll take a break. Now we come back, a short break. We'll head to London. And of course, you know that the Russia invasion is stopped most of our discussion. So do join us then. Oh, you're welcome back. The United States has taken the bold step of banning imports of oil and gas from Russia. The UK has spoken about it, but in their case, they say they're phasing out by the end of 2022. Juliana joins us now. Tell us what strategy the UK has to phase out this Russian oil and gas and reactions following this intention. Hello, Juliana. Good morning. What's the latest on this?
Good morning, Innie. Well, this ban on US gas imports from Russia is probably the most toughest economic sanction to be bestowed upon the beleaguered country. As it speaks, I think the US, they only really import about 8% of crude oil from Russia, but it is a significant show of force. Both President Joe Biden as well as Prime Minister Boris Johnson have been speaking in really tough terms over the past few days. We're obviously entered into the second week of this Russian bombardment of Ukraine, and it doesn't seem to be ceasing. NATO really careful not to cross over the line so we can end up in a third world war. And one of the only ways to stop the regime is by applying these sanctions. They were first mulled over the weekend with the comments made by Secretary of State Anthony Blinken, not the Secretary of State, but Anthony Blinken spoke about this. We did not expect it to happen so swiftly, but there appeared to be some sort of bipartisan support, even from Europe, who we know are more dependent upon Russian oil and gas. And now, because of the way Russian oil is plumbed into Europe, Britain said it would be impossible for them to cease gas or oil exports overnight, but they are giving British firms 9 months to slowly start phasing out the use. This is going to affect British industry quite clearly, because I believe we are reliant upon 8% of Russian diesel, and we know that diesel is what keeps HGV drivers and lorry drivers on the road. So this is going to hurt. It is going to hurt consumers across the globe, no matter where you are, because we are seeing that the price of a barrel of Brent crude, which is the benchmark, is rising significantly, and it will do so in the coming days following last night's historic announcement.
Yeah, and another aspect is the farmers. There's a surge in the price of fertilizer. Is it also connected to this?
Absolutely, it is connected to this. Russia and Ukraine are considered the breadbasket of Europe when it comes to some commodity stock. And apart from the rise in commodity stocks at the moment, of course, oil is the main concern. And oil is what is pumping the heavily produced fertilizer factories. And now the cost is surging so much. We've heard from industry experts, both on mainland Europe and in London, saying that it is going to start to trickle down on the prices. Inflation in the UK at the moment is at 5.4%. We're expecting it to rise to about 7.5% according to the Bank of England, whereas Resolution Foundation, which is a think tank looking at low to middle income households, they believe it could rise to 8.5%. And this is besides the cost of fertilizing all of these products. So there is is going to be a huge push. We are waiting for an announcement from Chancellor Rishi Sunak to try and see how we can abate some of these prices that are likely going to be trickling down into shops at the moment. But so far, it is not looking good. And Western leaders are only going to go even further with these economic sanctions until Putin and his regime is stopped.
Yeah, well, I guess it has to be stopped because it doesn't look good at all for any country at all. It doesn't matter how far you are away from Russia or Ukraine. Well, thank you so much, Juliana. We'll talk to you again at 1:30 during Business Incorporated. So let's head to the crypto market now with Ladi. I don't know, the situation looking better today?
Well, the situation is quite better today. For some reason, we're getting a faster, quick bounce in the crypto market. You know, considering what's going on with Russia and Ukraine, we're seeing crypto space adding some greens this morning, but it's still extreme fear in the market at 21% over 100. Market cap added about 6% there. It's $1.83 trillion. The total crypto market cap at this moment, 24-hour volume traded is up 6.90%. And dominance, Bitcoin dominance there up 43.17% this morning. And we see Bitcoin there broke the $40,000 resistance point there and jumping above 41K and trading at this hour at about $42,000. But at 8 a.m. was $41,500, up 8.64%. Volume traded in Bitcoin at $3.23 billion. And we see Ethereum also adding gains there this morning. All right, let's bring in Gilbert Repata now to bring us up to speed. Hello, Gilbert.
Morning, Mr. Ladi.
Yeah, morning, Gilbert. Yeah, I know Joe Biden is quite, busy at this time, with what's happening with Russia and Ukraine. But I hear he is planning to sign an executive order on crypto this week. What can we expect?
Okay, the executive order is meant to examine the regulatory changes, national security and economic impact this is going to bring to the U.S. economy. And the pressure has been more recently because of the global use of cryptocurrencies. We could see even countries like Ukraine and Russia also taking advantage of the freedom cryptocurrency brings. And one thing is, somehow a couple of persons thought this will bring uncertainty because of the issue of national security, a threat to dominance of the dollar, and then, but the thing is, this is only able to bring this organization and agencies to do more research, because if it's not a threat to national security, it's the opposite. It's like when the internet came. Once countries were going into the internet, the U.S. decided that, look, this is an innovative change going on in the world, and we need to take part of it, and not just be part of it, but become the biggest player for our own national security and for our economy. And that's what is happening presently as well with cryptocurrencies and blockchain. It is only a threat if the U.S. does not become the biggest player, which they always expect to be the biggest player in whatever they do. Neither is it a threat to the dollar or even other local fiat currencies all over the world. Bitcoin doesn't necessarily fit as a currency. It's more of a store of value. And most people also think it is also a way most people could use it for criminal activities. But the reverse is the case, because it is an open blockchain or open ledger that even helps track criminals. So it's even easier to use fiat currencies for criminal activities than using Bitcoin or cryptocurrencies.
All right.
But I think we already have a sneak peek to what the executive order is going to look like, and that's why we could see the bounce in the market.
All right.
With all the green.
Okay, I guess that's why we're seeing greens this morning. Anyway, we'll watch out to see how the executive order plays out. Thank you so much, Gilbert. All right, so top of the market cap, we see it's all green on that counter. We see Solana there adding about 6%, and BNB $395, almost getting the $400 this morning. So it's not looking bad in the crypto space this morning,
Not looking bad, but I mean, let's look out for Friday. It's always mostly a red day.
Yeah, so let's see what happens Friday.
All right, Laddie, thank you so much for that. That's it on the program today. Thank you so much for being a part of it. Let's do it again tomorrow morning. But before then, 1:30, Business Incorporated will give you updates from the world of business. I'm Ini John Mekwa.